All right, Evan, welcome back for another episode of Carnivore Trades. Today's Friday, November 5th, 2021. So market's gapping higher on the jobs number. So we had a good jobs number today. Market liking that. Wasn't too hot, wasn't too cold, the Goldilocks kind of number for the market. So market's gapped up. And now we're seeing a little bit of risk pairing, it looks like. So I want to show you some cool technicals here. So I was just messing around on the spiders. Obviously, we know we talked about this little trend line here over the last week or so. And we went up there, kind of hugged it, grinded it a little bit, and then pushed through it. And now it looks like, we're almost kind of in no man's land. I think, I believe I had this sort of trend line here over the last couple of weeks. And it's kind of, but it still kind of looks like it's in no man's land here. So I was just playing around. And if we go back and we look at the previous sort of rising wedge, the trend line that every bear in the world was, constantly retweeting and posting on all over the internet, pretty much all summer long. So if we go back and put that one back on there, look what we have. We went right up there, kissed that, and now we're pulling back in. So pretty cool technicals here on the charts as the S&P is now just pulling back. Look at that, just got up there today and now rolling over. So maybe coming into a bit of a risk zone here. I talked about, over the last couple of days that we probably pull back a little bit into OPEX week. And now I'm sort of forecasting, at least at this point, we probably do have a little pullback and then maybe some type of a vertical blow off kind of move into the end of the year, something like that. At least I think there's a good possibility for that. Let's take a look at the Qs here. So I said it probably could hold up into this trend line. We did gap higher, now pulling back a little bit. Might hold up a little bit, maybe on Monday or so. But I think this rolls back over at least to this midline here. It's got to probably back test this previous all-time high, which would coincide with this trend line, this middle trend line here. And if it gets through that, then obviously it rolls over and goes down to the lower trend line here. So pretty simple there on the triple Qs. But you look at names like NVIDIA, this is these big, huge, humongous green candles at the end of it. Look at NVIDIA here. That's exhaustion. That's what you call a blow off move here. I think tech is starting to get toppy. Look at Tesla, very top heavy here. Semiconductors, SMH here. That's getting a little top heavy here. You did put in some decent kind of consolidation here, but again, this doji looks like a little bit of a top there. The IYT, double top doji right into that. That looks a little. That is short-term overbought. It's basically gone straight up since the middle of September, the end of September. So that's getting a little stretched. So this market probably needs to digest some of these gains. Look at the reversal on IGV today. Microsoft, Adobe, Oracle, all coming back in. Those are big cloud software stocks. Zoom getting hit a little bit here, although this is into a little bit of support here. This is kind of where the stock sold off, and this is where you reversed. So Zoom might hold up in this area. But in any case, a lot of these names just getting a little stretched and a little extended. We talked about the financials yesterday. Those have continued to pull back a little bit, obviously, as yields get hit here. So now yields coming back in pretty precipitously now on to 1.45 on the 10-year. And I think we can probably get a little bit lower here. So, again, we talked about that 1.4 area. So we'll look at that and we'll just continue to monitor this. But yields getting hit, and that's going to pull financials back in, obviously. Energy as well. XLE actually holding up pretty decently. XOP and OIH all green on the day. And crude getting back some of those losses from yesterday, but still, it still is well off the highs now. And we've talked about crude quite a bit recently. So nothing too new to report here, unless it's, gets through 85. I still think it's in pullback mode for now. The one commodity that has changed is gold. So it looks like we're going to get above my resistance area. So gold may be on, I would say breakout lightly. I'm not saying it's going back to all-time highs, but it's on breakout in the near term. So it's probably going to be able to clear this 1840 area. And then you're going to go up and test these red bars, 1860 to 1880, that range there. GDX shaping up very nicely. Sandstorm had earnings the other day. That's reacting well. Wheaton has earnings next week. let's take a look at Barrick. Barrick had earnings, so that's behaving well. GDXJ, SILJ, AG, the list goes on. Pan American reports next week. All these names are starting to look good. They're finally starting to shape up, and we talked about that for a while now. And I pointed this out a few weeks ago, but check out the lower lows here on gold. And now what are we doing? We're making higher lows. So the trend is starting to change a little bit here for gold. So that is, looking bullish there. So, yeah, it's been a tumultuous year for gold investors, but things may be starting to turn around here. And let's take a look at the dollar quick before we wrap up. So dollar pulling back just a little bit, but did make a new year-to-date high today. So it did go up and test that 94.65 handle, pulled back pretty nicely. I don't think it's quite ready to break out yet, but it is still threatening this area. It just needs to do a little bit more backing and filling, in my opinion, and then the dollar will probably be on breakout soon. But in any case, I'm just going to wrap it up here. Be sure to tune in to the weekend video on Wall Street from Main Street for the full week wrap up. And you guys have a great rest of your weekend. Take care.